I'm fully fired up. Let's make it happen.
Welcome back to the Fired Up podcast, where we help you get your together so you can make it happen. We're all about starting, growing and scaling. Do yourself a favor. Follow our socials and subscribe to our channels so you don't miss an update. Let's get pumped up for this episode. Today we have an incredible guest joining us, Mark Said. He's the founder and CEO of MKS Group, a leading chartered accounting firm that goes beyond numbers to provide innovative business solutions and strategic growth advisory. With over 30 years experience, Mark has helped businesses transform through management consulting, financial advisory, and operational excellence. His passion for driving business and success mentoring for the next generation of leaders. Mark isn't just about numbers though, he's also a licensed pilot, bringing the same level of precision and strategy to both business and the skies. Today we're diving into his journey, lessons learned, and expert insights on growing and scaling a successful business. Mark, welcome to the show. Welcome back to the Fired Up podcast. Really excited to be talking to Mark today from MKS Group. Mark, let's just start off. Give us a bit of an understanding across your business journey and how you set it up and how we got MKS to the point it is today.
Sure. Well, thanks for having me on the podcast. It's a real honour, and
Thank you.
Finally here doing it, which is great.
Yeah.
So my business started probably back in mid-80s, quite a while ago.
Yeah.
I was straight out of school and I did my accounting degree part-time, so I didn't want to go out and do uni. I wanted to work, earn some money and live life as well as learn. So I did that, and you know, people know you're studying to be an accountant, they think automatically you can do a tax return. So there we go, we're doing tax returns for people back in the 80s when I wasn't even qualified to do them. And the businesses grew from there. I had someone who was like acting as a supervisor, mentor to me, and he was signing off on the work I was doing, and I was happily running a business and building it. And the business grew and it kept growing, and I was still working full time at that point in time. And I changed employers at one stage. And when I changed employers, a lot of the clients that I had at the previous job came with me. And that's how I realized that, you know, I started to learn about how accounting businesses can grow. And it all stemmed from wanting to be an accountant, was seeing the lack of support that my parents were getting from their own accountant.
Right, yeah.
And he was totally useless, right?
Yeah.
Never used to meet with them.
Yeah.
Not even a phone. It was only phone calls, right? And one day, Dad rang his accountant, his name was Roy, and said, Roy, I want to buy Mary a new car and I want to lease it. Do you think I can afford it? Yeah, Joe, no worries. You can do that. No problems. And Dad went out and bought my mum a brand new car, and there was no profitability checking. There was no, let's look at your numbers. I mean, fringe benefits tax didn't exist back then, so you could do anything you wanted. But I just saw the lack of support that they were getting, and the wrong support.
So did it start as a side hustle? So you're working in a job, but doing these tax returns in your own time?
Started at Westpac, of all places.
Yeah, right.
Only for a year.
Yeah.
And then hated that. And then my salary almost tripled when I left Westpac to an accounting firm.
Yeah. Right. Because it's interesting. Like I always talk about like the side hustle, like just about every business starts as a side hustle with an idea and then testing and trying until you go, hang on, this might actually work. And then you got to work really hard and do a lot of hours and build it up until the point where you go, yep, I'm all in.
That's it.
And then you're here. So we're talking like mid-80s, we're like mid-2020 now, we're almost at the 40-year mark.
Exactly right. And I'm only 58.
There you go. Still plenty of runway. So where's the business at now? Like how big's the team? Where are you servicing nationally? What does it look like today?
Yeah, so today MKS Group, we're based in Melbourne. So Melbourne based, but we've got clients all over Australia, including New Zealand. Yeah. So I'm up and over across the ditch, 3 or 4 times a year, which is great. Love doing that as well. We've got about 16 team members in Melbourne and about 18 offshore. Yep. And offshore is a combination of accountants, bookkeepers, administration team members, and some others that I actually then outsource to my own clients. So I'm finding now that my own clients are wanting to hire offshore people as well. So it's another service that we're doing.
And using you in order to do that because you've got the experience, the systems, the relationships, everything.
The whole lot, the whole relationship,
Yeah, cool. So today, I mean, in the last 40 years, I mean, this industry's changed massively. And you mentioned that your parents' lack of support, no phone call, no due diligence on purchasing decisions or anything like that. How has the role of the accountant changed today to fill that gap that was there?
Oh, the role has changed immensely. Honestly, it's back in the days we used to do, check butts, bank statements, paper ledgers, and
Shoebox full of receipts.
oh, I just thinking back now was just like a nightmare, absolute nightmare. But we evolved, and I always considered myself pretty progressive, so I was always looking for that next opportunity to improve systems. So business process improvement was one of the things that really helped my business grow, and I've helped other businesses grow as well. The clients that we were looking after. So we've evolved from the old shoebox style, receipts and bank statements and check butts to having maybe an Excel spreadsheet type of cash book where you then had to get all the checks and balances. And that used to be called Cash Flow Manager, that program. It was one of the first ones that came out that then evolved into an MYOB, that then became desktop, and you'd be handing floppy disks to everyone. And then the disks would arrive in the mail and they'd be bent or wet from the post office, and it was a nightmare. But the way it changed was that when we went from the old system, very, very manual, we started to get electronic with these cash book systems that existed, to then going cloud-based. So I'm sort of bypassing quite a number of years, but you can just imagine the change that had to take place. And you've got to evolve with that. And not only do you need to evolve as an accountant or the business itself, the team that work for you need to change. Now, if you've got young people, very easy to do it. If you've got older people, it's a little bit harder, more challenging to do. But then your clients have to adapt to it too. So we used to run all these training sessions on how to use these accounting systems. And when they realised that it was probably going to save them time, and people always want back time. We're always talking about, we'll help you get time back in your life to do what you need to do. And they love that. So now we're cloud-based. We've got bank feeds coming into our systems. We're reconciling live data every single day of the week. So if my dad was alive today and he wanted to buy my mum a new car, his accountant could just log onto the computer and say, yeah, Joe, I reckon you've made 45 grand profit this month. I think you can go out and buy a car, no problems.
In fact, it's a smart decision because...
it's an informed decision. It's not just, Joe wants a new car for Mary, off you go. It doesn't work like that. It can't work like that today. You'd be sued for that today.
So in your business, all zero? That's
We are 100% zero. And in saying that, we've probably got 650 zero clients and maybe 5 MYOB clients. And nothing else.
Nothing else.
The others have all gone.
That's, and Xero is obviously a great story and a great platform and product. I got their email the other day. The prices are going up again every year, but it's the thing, right? It goes. I think when I entered into that, I was probably paying $35-40 a month.
You pay 15. You'll probably pay.
I don't know when you went into it, but would have been 2000.
Oh, with your Buckles business, that would have been
2009.
Would have been $15, I reckon.
And now you get these emails, and you're like,
$80.
100. There's literally nothing you can do about it. But I think the thing is, if the product, and this is relating to all business, right? But if the product and the value wasn't there for the price that you're paying, then you're going to explore other options. And it is, and so therefore it works and makes sense.
It's all about how you articulate the value. And they do articulate the value. Maybe not in their email to us, because we are their salespeople. Accountants are Xero's biggest sales force, right? So they don't articulate the value to us, but it's up to us to articulate that to our client, to tell them, listen, if you don't use this, you're going to use another system and the cost's going to be a lot more.
So, because a lot of the clients that I've been dealing with since launching Fired Up and on the coaching side of the business, the topic of the accountant comes up quite a bit. And it's more, I'll give you some of the questions that they're asking me, like what should my accountant be doing for me? Can they be more proactive? Are they just doing tax, or should they be advising on how we can increase revenue, where the profit margins are? And these are great questions. And my answer to them is, it depends on your accountant.
That's right.
So let's hypothetically say that people, we'll start there. Let's assume that people have got a very good accountant. what type of things should they be getting from them to help them with those kinds of questions?
Yeah.
Hey, quick interruption. I assume you're listening to this because you are either starting, growing, or building your empire and you are searching for the freedom formula. I want you to go and check out the Fired Up app. It's in the App Store where you can dive into free course content and look through the course intros for paid content that'll be relevant to the journey that you're at. Don't delay, get fired up, go make it happen, and fast track with this business coach right in your pocket. Now back to the episode.
As a bare minimum, if you're a business and you're turning over, it doesn't really matter what you're turning over. If say you're paying GST, so you're turning over more than 75 grand a year. So you're turning over 200, 300, 500K a year, and it doesn't matter what type of business you're in either, okay? Whether it's service, where you're selling time, like what we do, or whether it's you're selling a product, or whether you're doing car washing, doesn't matter what you're doing, right? You've got to have as a minimum a quarterly report. And that report's going to tell you your profit and loss, tell you how much revenue you've made, what your costs are, what your bottom line is. Now that's the minimum quarterly. I don't like quarterly. I prefer monthly. Now I say quarterly because that's when you hand in your GST report, yeah? So when your accountant sends you a GST report and you got to sign that.
This is the BAS?
The BAS,
Yep.
yeah. You've either got to know what it is you're signing, or you're just putting your hand over your eyes and signing your name, or putting your hand over your screen if you're doing it electronically and push a button to sign it. But do you know what it is you're signing?
No. And me and the other people this is the boat we're in.
That's it.
Here's your BAS, electronic signature. You scroll through and try and make some sense of it.
Yeah.
But you go, well, like, do I need to? Like, if that's their job. So I assume what's here is right.
Yeah.
And we sign and we pay.
Yeah.
Is that what we should be doing, or should we be asking for more?
You should be asking for more. And if you're not getting more, then I think your accountant is failing you or letting you down. Now, we are always telling our clients that doesn't matter, I don't care what you're paying your accountant. If you're moving over to us, I'm going to price you and I'm going to show you the value that I'm delivering to you, right? So it's all about the value that you're delivering. Now, if you cannot deliver a report with the GST or the BAS, as you know what it's called, right? Most people probably know it as the BAS.
Yeah.
And that tells you where the GST has come from, so how much you owe the GST, what GST you've paid to your suppliers or your expenses, and how much tax you've deducted in wages for your employees. That is the net. Now, that should be explained to you. Yes, it's written on the BAS, yeah? But quite often people are just going to go click, 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 sign here, click, bang, done, goes back to the accountant, they lodge it, you get the BPay reference number and you pay it, yeah? And you're none the wiser.
That's correct.
Now, the question that we get a lot is, how can I have all this GST to pay when I've only got $500 in the bank? Where's my profit gone? There's the next, right? So that's the next level. So that's where you need to meet with the client at least minimum once a quarter when you give them the GST report or the BAS with their financial report, and you show them, this is where your money's come from, this is where it's gone, this is how much you've taken out for yourself, which is often what they forget. Yeah, they forget how much they've taken for their own living costs, hence why their bank balance is low and there isn't enough money to pay the BAS. Right, so that's where people get themselves in trouble, and we need to educate them around that. Every month, teach them how to look at their zero file, or every week even, teach them to look at their zero file, see how much GST they've collected. It's not your money. You're just a tax collector. So take that money and move it to another bank account where you're not going to touch it. You know that's not your money, and you leave it there. So when the BAS comes, the money's there to pay it.
Yeah. So that monthly report, which sounds awesome, by the way, is that something that's automated from your business, or is it something that is produced and put into the email for the client to kind of help them explain what they're doing? How does that work?
Well, in our business, it's not automated because we like to look at it, check it. Sometimes the narrative that goes with it can be automated because we've got some great AI tools. Everyone's into AI and we're no exception. In fact, I think we're leading the pack with AI. We've got some amazing things happening in that space, which is probably a topic for another conversation. But it can be automated. We can even educate the clients to run their own reports once we've given them the GST. So once they understand how the BAS is actually put together, we can show them how to find the report that they can actually see for themselves how much tax they've collected, how much they've paid, and what the net is that they're paying.
Is it a structure where, and I'm just trying to help people, including myself, and those that are listening to this, with the accountant, is it kind of like a monthly retainer for service plus the cost of doing the tasks that need to be done, or is it just? I want to understand how the pricing structure works because for me personally,
For our pricing?
yeah. Well,
Great
just even
question.
for mine, like my accountants, they're not on a retainer.
Fee for service.
Fee for service, and
Per phone
maybe
call.
that's. Pardon me.
Per phone call.
Yeah. per everything. But I think that's where we're trying to close that gap, right? Because I'm asking, I want more. And to your point there, if they said, "Hey Ben, you've got a massive tax bill coming up and the cash flow is not there or whatever," here's what we recommend. Let's put that on a payment plan because you've got this, that, and everything else coming up. That would be our recommendation. And also profits down. So what else can we do? Have you thought about this? Do we need to get on a session and talk about that? I would love that, but it's just not happening. And vice versa. Again, the commonality seems to be between these conversations with people is even when I reach out to my accountant, it can be days or weeks for a response. So if we come back to the initial part of the question, is it like, how do we now go and find the right type of accountant and how would we dissect that and filter off what to be looking for?
Okay, so that's, again, comes with evolution, how accountants have evolved over the years. Now, for the last, 10, longer, maybe 14 years, we've worked on retainer. Now, our retainers are organised around June every year. We sit down the manager of the client, so the account manager, will look at the work that we've done in the past 12 months, sit with the client and say, what do we need to do for you in the coming 12 months? And we structure a fee. That'll include your 4 GST returns, your BASs. It'll include unlimited phone calls. So we encourage our clients to speak to us regularly. We strongly encourage that. And to do that, we tell them we're not going to charge them. If the phone call results in a separate project that we need to do, we'll bill that separately. But if it's quick advice, no problems at all. So sometimes it's including the bookkeeping as well, the year-end financials, and the most important meeting of the year is always happening around April, May and June, and that's called tax planning. If you are not doing tax planning, you sack your accountant right now or you demand that they offer you that service. You've got to pay for it, but what it is, tax planning will tell you to a reasonable percentage of accuracy what your tax liability is going to look like before that financial year ends. So that you can do some things to prepare to either reduce the tax, some people delay invoicing to avoid getting the money, defer it to the next financial year, pay some superannuation, which is important. We need that for the future. Renegotiate loans with banks to prepay some interest. There's a lot of different strategies, and I could sit here and give them all away, but then I'll send myself broke. No, happy to give that advice out. But if you're not getting that tax planning, your accountant is failing you and you're failing yourself.
Right. And I think we'd be more than happy to pay for it, even just knowing that that was an option. So why wouldn't our accountants be saying, hey, Ben, would like to do tax planning with you and it's going to cost this? Why aren't they pushing that out as another revenue stream for them and a value add for their clients?
So we learned all this stuff. I'm not going to say we learned it. We evolved that part of our business based on what our customers want. Right. And I'm always big on find out what they want, go and get it and give it to them. It's simple. It's not rocket science, right? So when you survey clients, you say to them, what do we do well? What don't we do well? What do we do that you love? What don't we do that you'd like us to do? And some of them like to pay minimum amount of tax. Right? That's great. We'll help you pay the minimum legal amount of tax, but now we can put in some strategies to make that happen. So accountants that are not doing it are probably not offering an advisory service. So our business is split into two. We've got the tax team, or tax and accounting, or three really. We've got the bookkeeping team, the tax and accounting team, and the advisory team.
Got it.
Now, after 40 years, I think I've done my penance and served my sentence of doing tax. So I've decided I don't want to do tax anymore. So I don't. I now just concentrate with my team on doing advisory work. And that is the the things that we can do to help you grow your business and work with business coaches like yourself to implement systems for our clients to make more money.
Perfect.
Because the more tax they pay, the happier we are, but it's got to be the right amount of tax.
For a business, like you can just speak ballpark here, but say a business doing under 5 mil, what should they be kind of spending or paying their accountant per year? What would be the right kind of figure that someone should
up to about
anticipate?
5 mil, you'd be looking at probably just for the raw info, as in your GST, your quarterly meetings, tax planning, and end of year financials. You'd have to be looking minimum 10 grand a year.
10 grand a year.
That's a fair number. It can go higher than that,
Yeah.
because you might want some bookkeeping done. If you want us to run your payroll, we can run your payroll, and that's a bit extra as well. So we have like a menu of services, so it's like a smorgasbord. You can pick and choose what you want. We build that fee, we work out what it is for the year, divide it by 12, and that's your fee for the next 12 months. And if we do our chops on it, that we underestimated, good luck to you. If we've overestimated, well, we'll readjust with you in the next financial year.
Yeah. Okay, cool. Hold up. We're going to cut this episode short because part 2 will be coming soon. So stay tuned. Make sure you like, subscribe, and follow our socials so you don't miss the next update.